Right, this is a textbook example of how I trade. One of these examples where everything, or nearly everything, all aligned, making it a no-brainer for trade, which is cherry-picked and was in the event successful. First of all, this is what you see on my chart. I'll just leave that there. I'll not go into it too much. What I should add perhaps is I'll just add that in there now. Well, whatever, just mucking that up. Right, well, what I should add that all of these are set to real values. Right, so MACD calculated on real values, 50 EMA calculated on real values, and the reason for that is I make use of Heikin-Ashi candles. I make use of Heikin-Ashi candles for, well, two main purposes, maybe three, and I'll go into that now. Now, in a lot of programs, certainly TradingView, when you change your candle type to Heikin-Ashi, it will change the calculation of all your indicators, and including your momentum indicators down the bottom, which you don't really want. Uh, so, so I'll just start off right now with what I do here. So the first thing, well, I've got the weekly chart up here, and this is oil. This is US oil. So what I'm going to do is I'm going to draw these sort of boxes along there, and I'm going to colour that one purple, well, kind of pink, which indicates to me that that is drawn off a weekly time frame. And what that is, it's a supply and demand zone. And you can see there, 1, 2, 3, this is where prices come into equilibrium. Supply is coming into equilibrium with demand, and price has been rejected off of these levels. I'll draw quickly in a few more of these. I mean, like, I could, I could draw one there. You could say there's one kind of there, but what I tend to do is I will update it. I will get it to fit the most recent price action, even if it's got kind of a legacy, even if there's a legacy of price being those levels. So I'm going to say, I'm going to say, I'm going to say, and with that in mind, I'm going to take that one. I'm going to stick that one right there. I'm going to stick that one right there. Okay. So we'll just do that, get that a nice pink colour. Right. And now I'm going to drop down to the daily chart. I'm going to drop down to the daily chart. We'll just flick over to the actual daily chart I've got open there. You'll see there like four charts. Multi-time frame analysis is absolutely key. If you're trading without that, well, I don't know. Best of luck, I'd say. Took me quite a while to figure that out. The guy that taught me how to trade actually advised me not to do that. Anyway, and so what we've got here, this may look like the same, but that's also a daily supply and demand zone. Now daily, I just leave that blue. So there's a daily one there, and we'll come right down. I mean, there's certainly a daily one there. I mean, this is a bit irrelevant to the current price action, but I'm just describing. This one, you could argue it's a daily, but I would wager that that's going to become a 4-hour. So we'll get the 4-hour S&D zones drawn in, and again, for this purpose, I use Heikin-Ashi candles. This is the only time I'm going to like build up a chart, but just in the subsequent videos I'll make, you'll see how I'm thinking there. Right, so I think the daily kind of captures that. I mean, we could say, well, there's a 4-hour there, certainly. 4-hour, I colour yellow, and I'll go right down. I'll go down this green. Whoops, we don't want that. We want that blue. We want that blue again. We want that blue. Blue. That'll do it. We want this one. We want that one. I actually don't use a bright yellow, do that. Okay, so that's a 4-hour supply and demand zone. And green I'll use for 1 hour, and I use a kind of a turquoise for less than 1 hour. And the way I trade this, the way I use these, just got rid of that now. So on the weekly ones, I'll look at the daily chart for reactions off of it, for patterns, for tradable structure off of the weekly. On the daily, I'm generally looking at 4 hour. On the 4 hour, I'm generally looking at 1 hour. So for this trade, I was looking at the daily chart. Well, one more thing for Heikin Ashi candles. Heikin Ashi candles, they're not an accurate representation of price, but they are an accurate representation of trend. And here on the weekly, you've got just strong Heikin Ashi. You've got a strong trending bias on the weekly chart. So if we take that bias over to the daily chart, you'll see again here we have a strong daily bias, not as strong, there's a bit more chopping around. You see you had a bit of a consolidation represented by the indecision Heikin Ashi candles at this previous resistance, but price is broken through. Price is broken through, and we've already established we've got a bullish bias. We'll look at all the time frame. I mean, all the moving averages. They're all fanned out. They're all pointing upwards. And so now what we're looking for is looking for the last good pivot. We're looking for our last good pivot on our daily chart. Now I'm going to, and this is where our momentum indicators coming good. And I'm going to say I'm happy with this. I'm happy with this being a good pivot. And what I mean by the last good pivot is consistent momentum. Okay, we'll just enlarge this. So you can see here, price is down here, RSI is down there. Okay, price comes up, corrects. You can see that the price and the momentum is in agreement here with RSI. So if we're going to buy on the dip, this is the kind of thing that we'll want to see. I'll trade long against divergences as well, but you're getting into nuances there. We're keeping this simple. As you can see here, there's a little bit of a waning in momentum in the MACD histogram, but the lines itself are consistent. And what else we have here? What else we have here is we have all this. We have all these. Well, you've got this break of this supply and demand zone. So you've got everything coming in. You've got everything coming into alignment here. You've got a break on the daily chart. We'll just turn off now. We'll turn off now these Heikin Ashi candles. You've got a break on the daily chart of this key level. Momentum is consistent, so I can trust that this pivot anchor is going to hold. And what I'm going to do is I'm just going to sit there. Now where I enter here, it often depends. 61.8, that's a standard level that everyone enters at. I've got 55% on there because I find so many times if I go for 61.8, I get my entry air kissed, and yeah, and you just miss out. Other things I'll explain here. These cyan light blue lines, they are the 5 EMA bands calculated off the candle high and the candle low. This is also, like the Heikin Ashi candle, this also frames a trend. If I'm going to enter a retrace, it's a bit of a bonus if these Heikin Ashi bands are going to contain price should the trend work. It's just a bit of further confirmation, not totally necessary, just a further bit of visual confirmation that I'm thinking the right way. Now on this occasion, I went for a 55% entry here. And I risked down to there. Now, and I'm just shooting for that. It's not the textbook way of doing Fibonacci extension targets. It's just what I do. It's what I find to get reasonably good results with. So we'll just turn that off. It's going to keep beeping. Quit. Right. Right. So that's pretty much it. That's pretty much what I'm doing. So we'll just forward that and see how it went. Obviously went a lot deeper than was comfortable, but very quickly retraced and really quickly run to target. And that was it. And it kept running quite considerable bit further. But that was extent. That was my trade done at that point. Now, I know that Rocks FX, if he's the guy you follow, you're not going to really be into buying on retraces. But so we'll have a look. We'll have a look at the lower time frames and see. We'll look at the hourly and let's see how this could have been traded. Okay. And I would argue it's on the hourly, it's fucking untradeable because it just zips right back up a V bottom. You're waiting on the retest. It just keeps running. Now, where can you get long? Where can you get long here? Where can you risk down to? It's all very well with hindsight saying, well, I'd buy this flat, but I mean, there'd be nothing at all abnormal if that came down to, it just highlights the benefit of trading in this kind of aggressively buying the dip, providing you've got all your other duckies lined up and all in nice rows. So that's that trade. That's 10 minutes, and I'll knock that one on the head right there. That covers pretty much everything that I do coming into alignment. It's covering the use of the supply and demand zones and how I play them. It's covering the use of how I use the momentum indicators, or one of the ways I use them, and also the moving averages. So